The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. It is Thursday, and it's January 16th. So I opened up the room real early. Normally, we kick this thing off around 1 o'clock. It's about 1:45. Markets are kind of quiet right now. Of course, as soon as I say that, my phone starts ringing. So one sec. Okay, I'm back. Again, this is live, not recorded, so my phone is going to ring. So on occasion, I'll have to put you guys on pause and hit the mute button and pick up a few lines. So I was going to get into that in the intro here, but of course, as soon as I opened the room, the phone buzzed. So it is what it is. But the game plan this afternoon is a few things. Number one, I have to go over the disclaimers, okay, before I present. So that's going to be number one. Then number two, we're going to get into the trade setup. Okay, this is the traditional slingshot setup that's been around from day one. Okay, there's some things that have kind of developed along the way, but this one has been around, like I said, since day one. If you notice, this is a snapshot of the NASDAQ chart back in 2012. So, a big question I always get is, has this been form fitted? Has something changed with it? Has it changed with the market? The answer is no. So the setup is the same. So, I've been in the room since from day one. So I don't see why you change it if it's working. So that's my point of view on it. So for you guys that are brand new, this is going to be a great syllabus for you guys to lean on, okay? Because this is what's going on in the training room. Not only that, some of the buzzwords and things, the language that Michael is using is going to be the same language that I use this afternoon. So when he does talk about separation or divergence or a bullish or bearish cross, or he refers to something if it refers to the green line as the BBC, well, you'll know what that is. Okay, so for you guys brand new, this is a great syllabus for you to lean on again, and this will give you an eyes wide open approach on what to expect. Okay, what you're signing up for. Is this something you want to do? So stay tuned, and again, you'll learn a lot from this, I think. What happens over the years, the feedback that we would get, the guys that were on trial was, man, things are happening fast. You know, I can't absorb everything what's going on. Can you slow things down? So, you know, after hearing enough of that, I kind of raised my hand and said, you know what, I'll do the class. I know the setup. I'm in the training room every single day. So, you know, why not? Okay. The indicators are built inside my platform. The platform that you're looking at is DTPro. Both Michael and Dwayne use it. So not only do you get support on the platform, but also on the trade setup side. So it's kind of a unique situation. So we're gonna go over the trade setup. So the guys that are brand new, this will be something you can lean on. And then what we're gonna do is we'll go inside a live market. All right, and then we're gonna look for those trade setups in the marketplace. Okay, and what you'll end up, what you'll see me doing is looking for the setup, going through the steps, and then going inside the DOM. If you're brand new, this is what we call the DOM. This is the depth of market. This is where we do our buying, and this is where we do our selling. Okay, so you'll see me go inside and execute. You'll see me place stop losses. You'll see me trail the stop. I'll let you know when to exit. It's all according to the rules. And that's, again, the rules that's the first thing we'll do after I go over the disclaimers, okay? We're just going to apply the rules, all right? Some of the guys that are in the room are CFRN members. Guys, raise your hand if you have a question, okay? I'm going to go over some of the traps that people fall into. Along the years, people have shared screenshots and their platforms and stuff like that. On some points, they might be struggling. Okay, I'm going to point out a few of them. Hopefully, you absorb that information so you don't make those same mistakes again. Okay. Unfortunately, you have to go through that trial to learn those mistakes and lose a little bit of dough before you kind of have to hit yourself in the face and say, hey, slow down. I need to take this a little bit more serious or cautious and look for some of those things that those traps that I fell in before. So it's a learning process, okay? So don't feel bad because everyone goes through it. The good thing is if you're here and you are spinning your wheels, the good thing is you've identified it and you're here to maybe fix it. All right, and I think I can fix it for you. Just, again, the fact that you raise your hand and then you're here and you're asking the question tells me you're taking this serious. All right, so with that being said, ask questions, and I will pop open the question box here so I can visually see it. All right. I did something different today. I have the camera on. It gives you guys a visual what I look like, I guess. I don't know. I just thought it would be different. Put a face to the voice. So I'm going to try it out. All right. So hopefully I don't scare everyone. So that's the scoop behind that. All right. Let me get a sip of water. And let's start with the disclaimers. Let me move this over a little bit. I'm going to get my highlighter out. All right. All right, so the disclaimer. I have to present this or go over this every time I present. What I don't like to do is I don't, like a lot of people, they'll go through it, put it up in front of you, and say, hey, take a look at it, and then put it on a blanket. I've been doing this for almost 25 years, so I really have seen the good, the bad, and the ugly when it's come to trading, okay? And this disclaimer really is for the guys that are brand new to our space. I say that because You might be knocking on the CFRN door because you're curious about futures, or you're trying to learn what it is. Uh, you might have gotten some emails or marketing materials from other people saying, "Hey, look at futures and look at what you can do and look at how much you can make." What a lot of people don't do is balance it. They don't balance the risk, the reward with the risk. And that's what I'm doing. And I'm doing it up front because it is reality that there is risk associated with trading futures. Okay. What this disclaimer says is you can lose everything and some in your trading account if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, if you're not engaged in your trading account, okay, and you're not in tune what the news items are for the day. So if you turn your back to a lot of those things, this disclaimer is going to hit you right smack dab in the face. All right, and I have seen it. All right, so you're dealing with a leveraged marketplace. Okay, so it's great when you're on the right side. It's horrible when you're on the wrong side. The plus or the good side of it is if you decide to go down the CFRN path, let me switch guns here. Okay, you are going to have a trading plan, right? That kind of checks that box. Every trade has an 8-tick stop attached to it. Kind of checks that box too. You're going to be on a 4-tick range chart, and you have to follow a set of rules. Okay, so you have to be engaged in the marketplace. You got to be staring at the screens. So it's going to check that box. Okay, CFRN, they don't trade around news items. That's a big deal for them, and I agree with that 1,000%. Okay, so that checks that box because you have to be really in tune with what's going on in the marketplace as far as news. All right, and remember, everything that we do is going to be done on a trading platform. Right, platform that we're going to be on is DTPro. Okay, and we are going to be buying and selling on this DOM. Right, so you have to be engaged in your trading platform too. So even though this isn't a great, juicy marketing way to start a webinar, talking about risks and disclaimers and you can lose everything and some. If you go down that CFRN path, they check a lot of those boxes off. So maybe you don't become a casualty to this disclaimer. Okay, that's my point in saying this. So CFRN is doing all the right things. They're the educator. They're trying to point you in the right direction if you're looking for guidance. Okay, so that's why I'm mentioning that. But there is risk. Okay, the funds that you're using in a trading account should be risk capital. It should be capital that you can afford to lose, and it doesn't change your lifestyle. You can still pay your bills, right? We all hate losing. I don't like losing either, but that is the truth about trading. You are going to lose. You're going to have losing trades. You're going to have bad trades. It's just you're going to have losing days. It's just the way it is, and it's something you have to accept before you go down this path. You really are going to have to do that, and it's going to be hard. All right. Also, past performance is not necessarily indicative of future results. All right. Something I highlighted. It's something I have to talk about. So, so that covers that slide. Okay. All right. Get rid of that. Get my marker back out. All right. Here's the next slide. Basically, my relationship with CFRN. Okay. I'm Bert. I'm with Daniels Trading. Okay. Bert doesn't work for CFRN. CFRN doesn't work for Daniels Trading. Okay. We are independent. There is a line in between us. Okay. It's their indicators. It's their software package. Okay. It's their trading tools. They're the educator. Okay. So it's a third-party relationship, and that's why I have to disclaim it. Okay. The good thing is, this is the platform, DTPro. All right. So again, I work for Daniel's Trading. This is our platform. I support the platform. The indicators. If you decide to use the DTPro platform, I provide the support for that. The execution, the brokerage side of it, I handle all that part of it. Okay, that's kind of my role, support role. Okay. For Dwayne, if there's something about Dwayne and Mike and CFRN, if there's something about the payment, hey, I want to be a member. Where do I go? How do I sign up? That's between you and CFRN. Okay. Logic 247, what you see here. Okay. Any problems with this, you reach out to CFRN. Anything on their website, like videos, the Thursday night workshops, the weekly trading zones, any educational videos, any issues with that kind of stuff, you reach out to them directly. Okay. But it is fair game. If you can't get a hold of them, it's okay to call me, and I could reach out to them, text or call, and say, hey, Bill's looking for you. Please give him a call. He's at this number. Okay, so that's fair game, and especially if you're going down this path and you're using DTPro, leverage our relationship. Okay, because I know the platform and I know the setup. Okay, so if you have questions, what's nice is that you have someone to call on. Okay, you'll get a phone number. You could call me at the desk, and I'm the guy that's going to pick up. Okay, so that's refreshing, especially if you're learning something new, especially if you're learning something, even how to trade, and you're stumbling and running into trouble. Okay, so there's a lot of positives with that. Okay, so that's a relationship. That's kind of where our kind of roles fit. Dwayne's the radio guy, right? He's on the radio in the afternoon, and he's doing the Logic 247 and the concierge trade alerts and the weekly trading zones. Mike, okay, he's doing the training room, okay, and the recaps in the afternoon. Valerie, she's just doing everything. She's doing support. She'll fill in the morning if Mike's out or having computer issues. And like I said, I'm in the background every single day. And if you're using DTPro, then that's my function too. Okay. I put this on every Thursday because there was a demand for slowing this down. So I thought it was a great way to create an eyes wide open approach to this relationship. So takes care of that business. So let me switch guns. And what we're going to do now is go over the trade setup. Okay. Let me fit this here. Let me get my marker out again. Okay. So here we go. The guys that are brand new, some of the buzzwords, the language that I use, you're going to hear in the training room. And so this is a great syllabus to lean on. All right. First order of business is the time frame. We are on a 4-tick range chart. Okay. So if you have DTPro, the question is, how do you get there? Right. So chances are, especially if you're following Logic 247, okay, you're probably on a 30-minute chart. You might be on a 5-minute chart. Chances are you're on a time-based chart. Okay. So what you want to do is get on a range bar chart. Okay. So what you want to do is hit this drop-down box here. Go down to custom and select range bar and make that one look like a 4. Okay. You're staring at the S&P Mini on a 4-tick range chart. Okay. Why is that important? Well, here's the deal. With the 4-tick range chart, we know that the height of each candle is 4 ticks. Okay. Some look smaller, some look bigger. But in the end, they're all 4 ticks in height, okay? So here's the scoop. When you're in the training room and you're listening to Michael, at some point he might start calling out the highs and lows of the current candle. Okay, and you're going to be scratching your head. Well, what is he doing? Why is he talking about this? Because what he's doing is he's getting in position to put an order in advance. Okay, so what do I mean by that? Knowing the height of each candle, okay, you can be a little bit proactive or predictive. Okay, if the market right now is at 33.09, that's where the current market price is, and we have a bullish setup. When he starts calling out the lows of that current candles, he's getting ready to place a buy stop above the current market price. So he's going to go inside the green area here and right click. Okay, he's preparing to place a buy stop. Okay, if he has a bearish setup, okay, conversely, he's going to go inside the red and he's going to place a sell stop below the current market price. The reason is, okay, if the market decides to take off, boom, he'll be stopped into the position. If the market decides it wants to break down, boom, he'll take advantage of it to the downside. Okay, so what was happening? It's funny, maybe not so funny, but we would get some crazy advances or declines in some of the marketplaces, and for good reason. People are like, whoa, dudes, time out. How did you get into that trade? Okay, that there was no pullback. You didn't have time to get in. What he was doing is and what he's doing today is he's placing an order above or below, and he's getting in on stops. Okay, not all the time, but when it applies. Okay, so that's why I'm highlighting number one, the time frame, because all of his charts are on a 4-tick range. But when you do hear that calling out of the highs and the lows, get ready because he's placing an order. Okay, so just so you know in ahead of time, that's going to pop up. Okay, so the bottom line is 4-tick range. Okay, the trap that a lot of people fall into is they'll go down to the drop down box, select custom, but they'll select the tick bar. Something people do. I can't blame you because you're constantly hearing ticks. You know, we're trying to get 8 ticks, and our stop is 8 ticks, and we're trying to get our goals in ticks. So you just kind of connect the dots and go right here. So what you end up doing is making that 2 and making it look like a 4. If you're staring any chart that looks like this, you fell into the first trap. So the idea is to get on a range bar chart, okay? And the tip, this little parentheses here, that lets you know you're on the correct time frame, and you can tell the difference. It's smooth, okay? So that's a long-winded explanation on get on a 4-tick range, okay? Let me get this back up in front of us. So we want to do this. All right. Engage the marker. Here we go. We're going to work on the top portion of the chart now, okay? So here we go, some of those buzzwords. The red and blue line is referred to as the MA1, okay? Nothing really fancy about it. It's called the MA1. The green line is short for bullish. It's called the BBC, and it's short for bullish and bearish cross, because together makes up step number 1, okay, which is this. When the MA1 is crossing the BBC and the MA1 is red, that is a bearish cross, okay? If the MA1 is blue crossing the BBC, well, that's a bullish cross, okay? So the one that's highlighted here is a bearish cross. Why? Because the MA1 is red, okay? So take note that I didn't say get short, get long, get short, okay? What we're doing at that point is kind of step 1 kind of lights the match, okay? After the crosses, okay, we're looking for step number 2, okay, which is this. We're looking for bullish and bearish opportunities, okay, because a normal thing for the market to do after the cross is to gravitate toward that green line or the BBC. Okay, that's a normal thing. That's what you're looking for, the normal. Okay, so not only looking for a move back to the BBC, you're looking for it to touch the green line, but then a close in the direction of the trend. So if you have a red candle, okay, if you have a red cross, a red MA1 crossing the BBC, then you're looking for a red candle, okay? If you get a bullish cross where the MA1 is blue and crossing the BBC, then you're looking for an up close, okay? So you're looking for either a green candle or a blue candle, okay? The idea in the end is you want everything to be the same color, because when they're all the same color, that stacks all the probabilities in your corner, okay? So remember that point, all right? So again, after the cross, okay, your alert goes up. Okay, I'm looking to get short. Okay, let me tell Clark I'm in the middle of a webinar. 1 sec. Okay, so after that cross, we're looking for the market to gravitate toward the BBC, right? All right, that's normal stuff. What you're going to learn in the process here, along with step number 2, and you're going to see this in the training room, you're going to get in the habit of drawing trend lines, okay? You want to get in that habit. As soon as you get this cross over here, you engage the trend line, okay? So hold on. Okay, here's the trend line. When you put your mouse over it, okay, you're going to get in the habit of drawing trend lines. You're going to see it in the room. Michael's doing it all the time. So that's a habit you're going to have to get into, okay? Here's the reason for it, okay? Normal thing, market pulls back to the BBC, as good CFRN members do. We start drawing a trend line. So why do we do that? Number one, no, we don't know if it'll get back to the BBC, right? So look at this. Here's another example, all right, where it's starting to gravitate toward the BBC, do the normal thing. Okay, you're drawing your trend line, then all of a sudden it doesn't quite get there, and we close below it. Okay, that's a sign. That's potentially a signal firing. All right, you have to be ready. So if you're drawing trend lines in advance, okay, and you get something like this happening in front of you, you're in a position to take action. Okay, that's why you do that. So you get in those habits. So if it does, you're pushing buttons instead of thinking about things. Okay. Again, we don't know if it'll get here, right? So we draw, draw, draw. Eventually it does, and it does close in the direction of the trend. Okay. Again, another example here. There's one here. There's another one here. These are sloppy trend lines, but drawing them in manually. But the idea is you're going to draw trend lines because we never know if we get there. Okay. The other reason why we draw them, because as I said before, ideally we would like everything to be the same color. All right. That means a red MA1, a red candle, but also a red cycle. Okay. So that kind of leads us into step number 3. When we get this down close at the BBC after a bearish cross, step 1, step 2 has been satisfied. So when our eyes start gravitating toward the oscillator portion of the chart, which is called the slingshot, okay? The trade exists down here in the slingshot, all right? I'll show you why, okay? Let me get my pen out. You know what? Let me define some of the buzzwords here. This red and blue line is referred to as a cycle, okay? And the green line, it's just a green line, nothing fancy about it. But together, this is why this trade exists down here. It all happens here in the slingshot. What the cycle is telling us, it's red, right? Red means bearish. So what this is telling you is, hey, the NASDAQ on a 4-tick range chart is bearish. Momentum's bearish right now, okay? And if you have a bearish cross and the market has done the normal thing, which was pull back to the BBC and close in the direction of the trend, and you have a bearish red cycle, everything's the same color, right? So those are the things you're looking for, the easy and obvious, right? So it's telling you, hey, the momentum's down. But the green line, okay, the fact this thing is pulling away along with this price action up here, all right, is saying, look, this price action here, together with the green line pulling away, is saying, look, this might be just a pullback in this ongoing downtrend, okay? And when you see this separation, the green line pulling away from the cycle like a rubber band, you know, like that slingshot, that's why it was labeled that. When the green line's being pulled away, that's the separation or the divergence that Michael is talking about in the room, the space here, okay? All right, so the momentum's bearish. This little pop-up here, together with the green line together, is saying pop-up in this ongoing downtrend, okay? Step 3 has been satisfied. So we got all the steps there, all right? So now there's nothing else to filter out. And so then the next step is really to go inside the DOM and get short. That's what you're doing. Now I said the trade exists down here in the slingshot, okay? Why is that? Because here's what we expect to happen. Here's the normal again. What you expect to happen is a green line to pull away and get into the cycle. Pull away, get into the cycle. Pull away, get into the cycle until the cycle turns blue. Blue means buy, okay? So now the momentum has changed. It's changed to the upside. So now you're looking for that green line to create the slingshot or the separation or divergence below, okay? So that's what you're looking for. So what you look for as the market pulls away, you're looking ultimately for the green line to come back down into the cycle. It's at this point you close out the trade, okay? So step 1, we have a bearish cross. Now I'm thinking get short. 2, I'm looking for the normal thing. The normal thing is for the market to get back to the green line. In doing so, I draw the trend line, okay? Why? Because we don't know if it'll get there. We get to the green line and we have a down close. There's step 2. Our eyes gravitate toward the slingshot. We get a red cycle. That's good for the home team. And the green line is pulling away. This says get short right here. Okay? Where do I take profit? When the green line ultimately comes down and touches the cycle. It's at this point here we're cutting the trade loose. Okay? So what happens is green line pulls away, gets into the cycle. We take profit, right? Green lines pulls away. Guess what? We look for another shorting opportunity. We cut it loose when the green line gets into the cycle. Okay? You expect the green line to pull away. Okay? You look for another shorting opportunity. We cut it loose when it gets into the cycle. And we just repeat, rinse, repeat, rinse, repeat. So what you end up doing is selling this top, selling this top, selling this top, buying this dip, and buying this dip. That's what you're signing up for. Okay, you're learning to scalp. Okay, so in the end, okay, that's why the trade exists down here. Okay, this is where you take the profit. This is where you get into the market. Okay, so in the end, you're not learning. Okay, if this is day one and you're like, well, what is this all about? You're not learning to pick the top here, and you're not looking to pick the bottom here, and you're not learning to trade it from point A to point Z. You're looking to take a piece out of the middle. Okay, and along the way, you're going to have a stop loss in place. It's 8 ticks away. So if you're brand new and you're trading maybe the gold or the crude, and you're dead wrong, you're risking 80 bucks a contract. If it's the ES, then it's closer to 100. If it's a euro in the YM, which is the mini Dow, it's closer to 40 bucks. But the bottom line is every trade has an 8 tick stop attached to it. And along the way, you're going to trail the stop, trail the stop, trail the stop, trail the stop. Until when? The green line gets into the cycle. Then it's time to cut it loose. Okay? Why? Because we expect the green line to pop up again. All right? So that's the game plan. That's been around from day one. Okay? That's what we're going to be looking for this afternoon. All right? In the next 45 minutes. Now, if you just popped in, okay, I just went over the trade setup for the guys that are brand new. Okay? I opened up the room earlier so I could go over the disclaimers and stuff that I had to go over so we could spend more time together. Markets are moving, so I'm hoping we can find a lot of opportunities to get our hands dirty and give you some good examples. Okay? Ask questions. Okay? I'm happy to answer them. And let's get started here. Okay? So let me erase. Let me organize some things here. I'm going to get rid of this guy. I am going to go into demo mode. I'm going to get rid of this account. I am in demo mode. Okay. All right. First order of business. Okay. If you're taking notes, the number one thing that should be on the top of that page is the market trending? Okay. Is the market trending? Period. You don't push any buttons unless the market's trending. Right? Now that's easy to say. Yeah, the market has to make higher highs or lower lows, right? In the heat of battle, it's not that easy, okay? And if there's a big trap that people fall into, it's this one. It's the trending trap, all right? I'll tell you why. Because what happens is, and I'm not beating up Mike, it's because you're looking at Mike's charts and they are they're blown up, right? You see 4 charts in a row, 1, 2, 3, 4, and they're blown up pretty good, all right? What you're not seeing is the entire landscape of the market. What does that mean? That means this, all right? You have the market blowing up, okay? And we're looking at the market under a microscope, right? So right now, okay, here, just a quick bullish cross. The normal thing for the market to do is pull back to the green line, right? And in the process, we draw a trend line, right? That's what we do. But are we trending? Okay, that is the question. So I want you to get in this habit, okay? This red magnifying glass should be your best friend, okay? 1, 2, 3, 4, maybe 4, okay? Click it 4 or 5 times, all right? The reason is you can see what the heck's going on this way. Are we making higher highs? Okay, that's a big deal. You don't see that if the market's blowing up, okay? You have to zoom out a little bit. I'll tell you, taking a few seconds to zoom out to see what's going on over here, okay, can make the difference between you making and losing dough for the day. You can avoid some stop losses, okay? So that is a big deal, all right? This trending action is a big deal. And one solution The falling into the trap is hitting that red magnifying glass. All right, so that's a good habit. So the question is, are we trending? Yes, we are. We are making higher highs. All right. So is there a trade set up here? No, we don't have a lot of divergence here, and the cycle is flat. So right now, that's not one of those easy and obvious trades that I would get excited about for the moment. Right. So we're going to switch guns. Okay. Crude oil. First question we ask ourselves, are we trending? 1, 2, 3. Okay. Oops, sorry, I hit that a little bit too much. It takes some practice too. All right. Are we making some lower lows? Yeah, we are. Okay, we're making some lower lows. Okay. Let's take a look at some after the fact stuff, which I hate doing, but nothing's firing here. Let me blow it up so we can see it. All right. Here's a bearish cross back here, right? Let me get my highlighter out. It's right here. Normal thing for the market to do, pull back to the BBC. Here's a touch, and here's a down close. Here's also another touch and a down close. Do we have separation? We have a red cycle. That's good for the home team, right? Before we said when everything's the same color, it stacks the probability in our corner, right? Okay. Do we have separation? Is that green line pulling away? Yeah, it is. Okay, so we have step 1, we have step 2, and we have step 3. All right. The normal thing for this green line to do is eventually get down to into the cycle. All right. It's at this point here, you cut it loose. All right. Along the way, you're going to move the stop to at least break even. Okay. Now, the rules of engagement are as soon as you get into a position and the market moves 4 ticks in your favor, you're going to move it to your entry point. You're going to move the stop to your entry point. I'm going to show you how to do it once we find a trade here. Okay. So just put that in your background there because we'll go over that again. Okay. All right. So for the moment, okay, Crude did it again. Okay. Pulled back to the BBC. We had a down close, but here the cycle is sloppy. Okay. Number 1, it's blue, so that's not good. In fact, that should set up a flare that if it's the wrong color, that's watering down the probabilities. All right. And also look at how the slope of it for the moment, it's up at a 45-degree angle against you. So that's certainly, that's not clean. So to me, this says we're in chop. Natural gas in this, look, you don't even have to zoom out. Okay. Here's a good example of why we draw trend lines. Okay. Again, after the fact stuff, which I'm not a big fan of, but it's proving the point here. Okay. Okay, we're starting to pull back, right? Takes 2 candles to draw a trend line, right? So there's our 2 candles. We don't know if it's going to get back here, right? But here's the down close below it. All right. So we go through the process. We have the bearish cross here. We're attempting to move to the BBC. We get the down close. So now our eyes have to gravitate toward the slingshot, right? All right. So here we go. Do we have the separation, the divergence? That sticks out big time, all right? But now the cycle is blue, all right? So, number 1, we know that waters down the probability, okay? So, seller beware. And number 2, the fact that this has turned color on you, it's a different color, it's blue, this trend line is required. So that's another good hack. That's another reason why you get in this habit of drawing trend lines, because you never know if the cycle goes from red to blue. You don't know, okay? In the heat of battle, this can turn color on you. And once it turns color on you and you try to activate the trend line and try to draw a trend line, it might be too late, okay? And here's a good example of it, okay? It just broke down. But the fact of the matter is, we drew the trend line in advance, okay? And we have the down close. We have the separation. It's a different color. Okay. This is a legitimate short. This is something that you could take action on. The normal thing for the market to do, green line to get into the cycle, and that's where you cut it loose. Okay. So that's another after the fact setup, but we're not interested in looking at that stuff. I will point those out just to show you some examples. All right, this is the gold, February gold. Notice the first thing I do is zoom out. Okay, for the moment, gold is not trending. Okay, yep, we're starting to get this bullish cross. Okay, but look, we have a high here. We might bump our head up against. We had support here. So basically, okay, we've kind of expanded the sideways action. Okay, so we're sideways. So what does that mean? That means if you're looking for a bullish opportunity in gold, this is a good start, but you want the market to start trading north of this price here. You want it to let it make some higher highs first. Okay. Remember, we're not buying tops and bottoms. We're going with the momentum. And notice how I zoom out a little bit further. There's no obstacles over here. There's a blank space. So we could, that would tell me, hey, we're trending. Okay, so for the moment, we're standing at parade rest in the gold. I'm going to go back to the indices because that's a market that everyone's looking at. Okay, again, here's that pullback to the BBC. There is nothing here on the slingshot to do. Okay, so we're not missing out on anything. All right, I'm going to go down the list of currencies. All right, the rules apply. It doesn't matter what market you're trading. Okay, as long as it's got some volatility and liquidity. That's what I would say. Okay, so if you're interested in the grains, okay, there you go. You could trade the same setup with the grains. Okay, we're looking at the euro. First order of business, are we trending? Okay, right now we're sideways. Okay, so I don't see anything going on with the euro. One thing I do see is dynamic support and resistance dots. Okay, and the market sideways here. That's sideways action. So nothing going on in the euro. British pound. Okay. Here's a point to make here. I'm glad this popped up. All right, so here we go. I'm going to draw some trend lines and stuff, so just bear with me. And I'm going to make a point here. All right. The marker out. Here's the bullish cross. Okay. We're not trending until we get over this high. Okay, we start doing that, right? This is our first pullback toward the BBC. Okay. There is the touch and close in the direction of the trend. Okay. It's not a green candle. It's not a blue candle. It's a doji. Okay. That's bullish. Okay. Our eyes gravitate toward the slingshot. It's easy to spot that we have separation or divergence, right? We do note that we have a red cycle. Number one, waters down the probability. But number two, a trend line is required, and a close above that trend line activates the trade. Okay. So right here is actually a setup to go long. Okay. You ultimately expect the green line to do what? To get up into the cycle, and along the way, you move the stop up, until at some point you get stopped out. Okay. It happens again, right? Is the cycle blue or red? It's red. Okay. A trend line is also required. Okay. Notice the slope of this cycle. It's flat here, but it's starting to curl over. Okay, so I want you to keep that in the back of your mind. Okay, so here we go again. Here's a clean cut move back to the BBC with the up close. All right. What color is the cycle? Red. Waters down the probability. Trend line is required. A close above the trend line is required. You get that, right? Look at this. This is at a 45-degree angle against you. Okay. This is the second trap that people fall into. Okay. This is the second disqualifier. Okay. Okay. Which is this. If the cycle is the wrong color, but going against you at a 45-degree angle, okay, you're not pushing any buttons. Okay, you're on the sideline. Okay, because remember what we talked about earlier when we went over the setup. This is telling us momentum. This is bullish momentum. This is bearish momentum. And not only is it bearish momentum, you should also be thinking of the slope of it. If you're in a bearish scenario and that cycle is red at a 45-degree angle, that's really good for the home team. That should give you a lot of confidence. Same thing in a bullish setup. If the market is going up here and that cycle is blue and it's pitched up at a 45-degree angle, that tells you have the wind to your back. That should give you some confidence to take that trade. Okay? So not only are we looking for the same color, but man, if you got the slope of that cycle behind your back, that's all good stuff. Okay. So the point of this is that we have the bullish cross back here, and we're mentally buying pullbacks. We're buying pullbacks, right? Here's the last one we get to, and this cycle is the wrong color, and it's going down. Look at the market action after the fact. It's telling you no way. Okay. So you have to consider that, all right? If you're unsure, like right here, this is red, and it's got a little bit of a tilt to it. If it's me in the cockpit, I'm not pushing any buttons. And I know what you're saying. Man, but you missed out on that. So what? Okay? The idea is this is watering down the probabilities, so that's got me concerned. But number two, I don't know if this is going to do one of these. Whoop, fall off a cliff. I don't know. So easy and obvious. You're going to hear Michael talk about that in the training room. Easy and obvious means this. Everything's the same color. Okay. So if you want to eliminate all the guesswork, just wait for the setups that the markets are trending. Okay. There's no guesswork in that. Everything's the same color. There's going to be less trades, but you can feel comfortable that the ones that you do take, at least you know the probabilities are with you, and doesn't mean that you'll always win with those, but at least you know, hey, the ones that you did take, they met all the criteria. All right, enough of that. Swiss franc. Here's a perfect example of this. Okay. Sloppy trend line slick. Hold on. Perfect example. Bearish cross, pull back to the BBC with the down close. We drew the trend line. What color is the cycle? And look at the slope of it. Do we have the separation? We sure do. Okay. This is something you get excited about. Okay. Is the trend line required, guys? No. The trend line is not required if it's all the same color. Okay. But if you continue to draw the trend lines like Michael is doing in the room, and the cycle changes on you, it changes a different color, right, as it does here, or it doesn't quite get there, hey, at least you're in a position to push the button in the DOM. Okay. There's another example. Okay. The slope. It's blue and it's got a good pitch to it. It's on a 45-degree angle. That's just good stuff. All right. So don't, the slope is just as important too. The same reasons why we don't take trades when they're sloping against us. All right, let me get rid of it. By the way, when you start drawing a bunch of trend lines on your chart, a quick way to get rid of all of them with one button. See this little button here that says select all? Left click on it and hit that black X. Gets rid of them all of them in one, especially on a single thread like mine. If you have your charts floating like Mike's, then if you draw a trend line on the ES or the Euro or the gold, those will stick. But if you're on a single thread, you have to delete them. Okay, because what will happen is those trend lines carry over to the next chart, and you're watch this. I know you guys have seen this because you've experienced it. So I'm on the Swiss franc. I drew a few trend lines. Let's look at the Canadian. You're going to say, what's going on with my chart? The reason is the trend line was transferred over to the Canadian chart, and now it's goofed it up. Okay. The solution, either you can just get rid of the trend lines manually, or select all, black X, Canada dollar. All right, so let's look at the Canadian while we're sitting here. Very good sideways channel. Okay, sideways by the tops. But if you're not sure about trending action, dynamic support and resistance dots are a good hint. Notice how they are next to each other, side by side, like a pair of choo-choo tracks. That is one indication we're just sideways. Okay, so you're not sure about it. Okay, look at the dynamic resistance, and if you're still not sure about it, don't push any buttons. Okay, keep it simple. It's got to be easy and obvious. So market moving. Look at this ES still caught up in the sideways channel, so we can't do anything. Let's go back to crude. Okay, so we do have some lower lows here. What's interesting about this, guys, is we did buy, this would concern me here. Watch this. We just talked about it. Dynamic support and resistance side by side, right? Indicative of some sideways action. If we start spending some time down below here, that will give me some confidence that, hey, now we're starting that trend back down again. What's cool about it is, this cycle's starting to curl over and it's red. We like that. Okay. So if the crude comes down a little bit and then we get a little bit of bounce, maybe it bounces back to that BBC, we can take advantage of it. So the crude potentially has a bearish setup happening. Okay. And the way that I'm kind of analyzing the charts, with time, you're going to start doing that. You'll start thinking 2 steps ahead, okay? And that's going to work to your advantage at some point, okay? Right now, you're just digesting information. I'm just throwing stuff at you, and Mike's doing this and that, and you're like, just stop the bus, pull me off, I'm getting sick, all right? Watch a few more of these videos, okay? And it'll start slowing some things down. Spending time in front of the screens, watching it over and over and over again. It's like watching a movie. It's like watching Caddyshack. You watched it 100 times. You know the words before they even say it, right? So it just takes time. All right. All right. Let's move forward here. Man. All right. We need to get inside the DOM and do something here. This is goofy. All right, so here's what we're going to do. Here's a trend line. This is our first attempt at coming back to the BBC. This is an easy one. We have a bullish cross here, right? MA1 is blue. Nobody touch your DOM. Okay, I don't want you to do anything. You know why I'm going to say this, right? We are not trending. We have a double top here. But I want to get some action going on in the DOM so I can show you what the heck's going on with the DOM here, especially the guys that are brand new. Okay, here's that example. Here we go. Oh, we get the up close. All right, so hold on. All right. Not necessarily the best fill, but let me go through it, okay? We just got long, okay? What I did is I went inside the green and left clicked, okay? What I was going to attempt to do is to tell you this. If the low is 1551 and a half, the high has to be 5190, okay? So if you were going to be proactive during this candle, you would have right-clicked in the green and placed a stop. That's one way to place the order. Okay, that's what Mike is doing in the training room. Okay, that's how he's proactive. The other way to do it, okay, is wait for it to qualify, which it does here, all right, and then left-click in the green and take action. That's the other way. Now, I said don't touch your platforms at all because there's a few things that bother me with this. Number one, we're not trending, right? We don't have any higher highs, all right? And do we have any divergence down here? Heck no, okay? We do have a bullish, this is cool. I mean, we have a bullish cycle, all right? But ideally, we want this green line to be underneath it, okay? We need that separation, okay? So if we get stopped out of this thing or whatever, it's not going to surprise me for a few reasons, okay? That's why I said stay off the market, your buttons, okay? But it gives me a chance to describe what's going on inside the DOM. All right, see this Tinker Toy triangle up here? See how when I push it, the bottom of the DOM opens up? This is called the bracket option, okay? This allows us to place a stop loss inside the DOM. As soon as we enter the trade, it actually automatically places our stop loss 8 ticks away. So if you left click on this bracket option and select buy stop and sell stop, if you right click over that and go factor in ticks, right click over buy stop and factor in ticks and put the number 8 in there, that will automatically put the stop loss 8 ticks behind your entry. We entered here. Here's our stop loss. It's right here. Okay. So we didn't have to do any extra. We didn't have to push any extra buttons. It does it for us. Okay. In the heat of battle, the less buttons you're pushing, the better. Okay. Also, here's another habit to get into. You should have this working orders tab open. Okay. Here's our stop loss at 1551.30. It's also right here in this box. Okay. So at the end of the day or at the end of this trade, once we get out of it, this box better be grayed out. Okay, there shouldn't be anything in there. If there is, that means you have a loose end, you have an extra order working, you need to cancel it. Okay, it's hard enough to make money in the market, but if you get filled on something you didn't intend on getting filled on, it's a hot mess. You go into panic mode. All right, this should be open. I don't care. You can minimize it. Okay? Just have it open. Okay. All right, so hold on 1 second. Let me pick up this line. Okay, that sidetracked there. We were talking about Kansas City wheat. You guys probably, well, I did change the chart, so we were talking about soybeans. So, all right. All right. I don't know where I was. All right. So here. So we had the crude breaking down a little bit. All right. So we'll look for any pullbacks in the crude to get short. Okay. Oh yeah, we were talking about gold. All right. So all that. Okay. There was the up close. Actually, this was the up close here. Okay. And like I said, we tabled. We didn't do anything because there was a lot of bad things going on. We weren't trending. The cycle wasn't was back here. There wasn't any divergence. So this sideways action back and forth isn't surprising. Okay. The bracket option is what we were talking about. That's it. Okay. This is our stop loss. Okay. And what Michael is doing is all you have to do is drag the stop up and down to move the stop loss. Okay. So look, it's at 1551.30, which is 8 ticks away. If I want to move it up 1 tick, you just left click over the number 1, drag it, and release it. Drag it and release it. Notice how it's changing in here too. That was my point of bringing that up. Okay. So so this is the bracket option. So that's why I brought that to your attention, because once you get into the market, it's also going to place a stop behind it. And the easiest way to babysit it is just drag and drop, drag and drop, drag and release. Okay. That's it. All right. So that's all we do. No, we don't have targets. There's a question in the box. Do you put it, do you have a target? No. Michael does in the morning. He's doing that because he's trying to get his goal, right? So he's doing it to get his goal, to get on the board, okay? For you, okay, by the rule set, there's no targets. Why? Here's a good reason. This action. Be nice to catch some of this, okay? Now, this is just an example. There was no setup. The idea is you want to run. If you catch a runner, you want to run with it, okay? So that's the idea. In the end, we do know the point in which we take profit, right? Is when the cycle pulls away and then the green line gets into the cycle, okay? Here's a good example of it where it keeps going, keeps going, keeps going. This is the point where we cut it loose, somewhere in here. Add a few more ticks in it. There's a decision to make. At this point, you either just cut it loose or you tighten the screws up on this sucker until, try to get a few extra ticks out of it, okay? You just never know when you're going to get that runner. So you want to try to keep that open-ended, okay? So no, the rule book says no targets, all right? All right. So we'll just let that sit, all right? The other reason for moving the stop up, remember, money management plus 4 ticks in our favor, okay? That means the market would have to get up here before I can move the stop to break even. And break even is your entry. This is our entry on the Dom. All right, so it's advertised up here, and it's also advertised with this green line on the chart. Okay, so we would move our stop here. The other reason for moving the stop up is if it closes on the other side of the MA1. That red and blue line is the MA1. So if we close on the other side of that, then we move the stop to break even. Okay, so 2 reasons. So every trade has an 8 tick stop attached to it. Okay. Number 2, if it goes 4 ticks in our favor, or one height of 1 candle, right? Stop goes to our entry. And then if it closes on the other side of the MA1, then our stop goes to our entry, or maybe a tick in front of it. Okay. It's kind of the rules of engagement. 152. Okay. All right, let's go check up on our crude. Okay, we might get our first pullback here. Let's just make sure that we're trending. Notice how I zoomed out. That's your best friend, the red magnifying glass. Okay? I don't see anything over here, so we're trending. If we get another green candle, then we can connect the dots. Activate the trend line. Okay? If we get another green candle, ideally we'll connect the two dots. Okay? There's a question about trend lines. Okay? If I'm drawing a trend line, if you have a wick, start at the wick. If you have a body, you know, it's one big green or red candle, okay, cut it through the corner of the body, right here, okay? That's how I would do it. If you have two wicks, just connect the dots on the wicks, okay? I hope that makes sense, okay? So if we get another up if we get another move up, I'm going to draw a trend line off the lows, okay? So we're waiting for that to happen. I'm going to go back to the indices, zoom out, zoom out, zoom out. We do have some higher highs, okay? Is this good for a bullish scenario? No, okay? The other thing is we have a double top here. Stay away from the indices, okay? Maybe as we get closer to the close, if we get above this high here, then start looking to get long on pullbacks, okay? But we need the market to make some higher highs. It's really flat right now, okay? Okay, let's go over here. I'm sorry for the pop-up, guys. See, there's our gold that's kind of being lame. Let's go to the natural gas. Okay. Oh, good example here, guys. Okay. Here's that trend line. Right, we get all excited. There's the down close. And holy smokes. It's blue and at a 45-degree angle. Okay. No trade. Okay. Don't touch it. All right. That hits you right in the face. Okay. So that's a good example of that. So we're going to stay away. What that means Rich, is basically the momentum, which was bearish, is now kind of subsided. And if she starts curling up, what should happen is that the market will come up and do a cycle reset. So we might be doing this. Boom, boom, boom. We're heading down the path. It's very bearish. But at some point, right, markets just don't go straight down, right? So at some point they go boom, 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 consolidate, then they might retrace and then start the trend down again, right? That's what this is probably suggesting. So we had this move down. Now it's just going to do a retracement. The momentum indicator is telling us that, and then maybe we do another push lower, okay? But when it's doing this in retracement mode, we don't want to short it, okay? What you're going to find out, check this out, just an observation.
Hey, I just had some 643.2.
Man, this bearish cross started way back here. It started at about 12 o'clock, 12:15. It's almost 2 o'clock, all right? How can I put this? Your best setup is going to be right after the cross. If it takes 1 or 2 hours, okay, you're asking for trouble back here, down here, all right? At some point, this is going to retrace. It's usually after the cross, that first time. The first and probably the second attempts at the BBC are going to be your best times. An hour or two down the road, you're asking for it, all right? At some point, as we start laying down here in the cycle, it's going to curl up, all right? So don't go to the well, okay? Avoid it. If you caught a run here and maybe another run, all right, good, all right? Why natural gas? I thought it was thinly traded. Every Thursday we have an AGA report. It's a supply number. I know it's going to move the natural gas market around. All right. I am familiar with the personality of the natural gas market. So this leads me into another thing. A question that I get all the time is, how many markets should I trade? Right? Mike's got 3 or 4 or 5 up, right? My opinion is, if you want to trade 4 or 5, that's fine. I'm okay with it. What's going to happen is you're going to whittle it down to 1 or 2 eventually, because you're going to gravitate toward those markets that fit your personality. Okay, what you're comfortable with watching too. So, for example, over the years, Mike used to have the crazy mini Russell up. Okay, and it's like driving a race car. But you know, actually, he did really well in it. Okay, he did well. I'm like, hey, I've been doing this. You know, I've been doing this for a while. If he can do it, I can do it. That's for sure. Sure enough, get the DOM open, you know, get the chart up. All right, I'm going to put on my first mini Russell trade. This thing hops, skips, jumps. It's erratic. I'm not familiar looking at it all the time. I'm hitting the exit. I'm out, in, out, in. I was a crazy person, right? The reason was because I wasn't familiar with the personality of it. And I'm not a jumpy person and a guy that overreacts and stuff like that. I don't know. It just we weren't in sync. So my purpose of this is, look, if you want to look at 3, 4, 5 different markets, that's fine. I think in the end, you're going to whittle it down to 1 or 2. You're kind of in the, I want to get to see as many examples as possible mode. That's the mode you're in right now. Okay. You're trying to take it all in. All right. And I know you guys want to get to the finish line quick. It's not going to happen. Okay. You have to have patience with this. If you don't, and you jump into the deep end sooner than later, you're going to drown. So just be patient with it. Observe as much as you can. Absorb what you're seeing. Okay. It'll come with time, but you have to spend some time in front of the screens. That's the bottom line. Let me check out the crude real quick. All right. So hold on. Let's not go anywhere. Here's how your trend line should look. By the way, you should be in March crude. Okay. GCL H20. Okay. So that's how your trend line should look. All right. So let's cut this up, and this will be our last trade. Okay. Bearish cross. The MA1 is red. Okay. Crossing the BBC. So we're looking for shorting opportunities. The normal thing for the market to do is to gravitate toward the green line or the BBC. We don't know if it'll get there, so we have to draw a trend line. We've done that. We have to answer the number 1 question. Are we trending? Bert told us we should hit the zoom out button. We've done that. We're trending. There's no other obstacles over here. Also that, we broke dynamic support here. Okay? I feel comfortable saying we are trending. All right. This is cycle red. Good for the home team. Is the green line pulling away? We have the separation. All right, so check this out. Here's Michael in action. If the high is 58.47, the low has to be 43. Mike is going in the red and right-clicking at 58.42. Okay, I have to set up my bracket, so I'm sorry. Factor in ticks, make that 100 look like an 8. Let's try this again. If the high is 58.47, the low has to be 43. Right click, 58.42. Okay. 58.42 will light the match the downside. Okay. 58.42 would create a red candle and also a close below this uptrend line that I've just drawn. Okay. Now you're wondering, all right, whoa, slow down. Here's the magic formula to this, okay? If you just add or subtract 5 to the high or the low, that's the number you click on, right click on. So if the high is 47, subtract 5, 42, right click. There's your sell. There's our stop loss, 8 ticks away, right? We've done that by creating the bracket. So we're setting it. That's a proactive way of getting into the market, like Michael would. So we're going to see what happens, okay? So either going to fall apart here, or we'll go up to the green line ultimately and do the normal thing. We'll see what happens, okay? Right. So here's, again, one way to do it is like we did it. The other way to enter this is you wait for the close. You wait for it to qualify physically, right? You know, in front of you. You get a red candle and it closes below the trend line. Then you can go inside the DOM, but instead of right clicking, then you left click. Okay. If you're going to be proactive, selling it on a stop, you're doing right clicks. Here's the current market price right here. Okay. All right. Now, if we make a higher high here, we're just going to cancel the order. Okay. Because that changes everything. See what happens. Any other questions while we're waiting for this thing to hopefully break down? And if it doesn't happen in a few minutes, we'll cancel the order and call it good for the day. It may not, so we'll see. I think in the end, the idea, I know Bruce, you're in here and you're still learning, is just to go and you break it down, okay, into steps, okay. I'm going to follow these 4 markets. All right, cool. Number 2, okay, start with, do we have a bearish and bullish cross? That's usually the easiest one to pick out, okay, and then go through the motions. All right, as soon as I get the cross, activate the trend line. Wait for it to do the normal thing. Start drawing trend lines. Hitting the zoom out button, making sure that we're trending. You know, eliminate those other obstacles that can possibly, you know, blow up the trade in front of you. So it's just, you know, it's reps. It's like, you know, I coach girls softball, and it's just reps over and over and over and over and over. And they're like, man, this is boring. I'll tell you what, the next time you get a routine ground ball, because I've hit about 100 to you, you're going to make the play. Not only are you going to make the play, but you're going to be comfortable and confident to make that play. That's what's going to happen. All right? It's the same thing with this. It's no different. You're in front of the screens, pushing the buttons, you're executing. Okay? In demo mode, at least it's not costing you any money. So, all right, a few more minutes here. Oh. I'm thinking anything else we can cover. While this is happening, you know, another thing to consider. I got an email today. Guy wants to trade the mini NASDAQ, which is fine. Okay. The mini NASDAQ is really quick. It's a mover and a shaker. One solution, if you're just dead set on trading that market, what you can do is go from a 4-tick range to an 8-tick range and slow things down. Okay. That would be my only advice. The same rules apply. The only difference is the stop losses. Instead of being 8 ticks, they are 16 ticks. Okay, the height of one candle. That's it. Slows it down a little bit. So we got, look at that, we had that in the crude here. Interesting enough. All right, well, it's kind of laboring here, so I'm going to call it quits. All right, so that wraps this up. Okay, every Thursday we'll hang out and do the same thing over and over and over again. Okay, guys that are brand new, okay, here's your cheat sheet. All right, I know Mike has it. You probably got an email from me with it as an attachment. I know Michael puts it as a handout in the room. So here's the trade setup that's going on inside the training room. Okay, it's been around from day one. So that's number one. Number two, okay, I think the best way to take advantage of this is download the platform, download the indicators, take the trial, and watch these videos that I'm doing, because it's going to slow things down a little bit, okay, and you're going to learn some of the traps that people have already fallen into before you, okay. So unfortunately, you know, yeah, some have to stumble before, you know, we learn from it. So watch some more of these videos. You can fast forward it through some of it now, but that would be one great thing to do. And then ask questions. If you're serious about this, keep asking questions, asking questions. If you ask me, I'm happy to. Okay, so just have to raise your hand. That's all I ask. I won't bother you. So that's it. So every Thursday for an hour. When it's dead, I'll come in early to try to get knock out the disclaimer stuff so we can hang out for a good solid hour looking at markets. I'll see you in the training room. I'm in the background every single day. I'm covering for another broker here, so if I'm busy, I can't, you know, I'll just be tied up. So that's it. If you have questions, shoot me an email or give me a call.